Welcome to part three of our three-part series titled Doing Good Gives You a Tax Break. My name is Taylor Bentu, and I'm the Financial Paraplanner for APC. If you haven't listened to part one and two, I'd really encourage you to go back and have a listen. We talked about qualified charitable distributions and a bunching strategy for taxes. Today, we'll be jumping into donor advised funds. Joe, I'll give you the floor.
Thank you, Taylor, and thank you, audience, for coming back to part three. And this is going to be a very fun topic, and it's all centered around charitable giving and the use of donor advised fund. And those are gaining in popularity because of the changes in tax law and because people are beginning to realize that you don't have to have a foundation to be charitably inclined. You can actually use this tool that's been around for a long time to facilitate charitable gifting. So let's dive right into it. What is a donor advised fund? Well, just think of it very simply as a giving fund, because that's what it is. And just as important, it is a tool for bunching and dispersing funds to your qualified charities, which we talked about in part two, is the bunching strategy. And this is the ideal tool to use to accomplish that. How does a donor advised fund work? Well, for one thing, you put many types of assets into the fund, whether it be cash, stocks, mutual funds, even real estate, and you receive an income tax deduction at the time of the donation. So in other words, whatever you contribute to the donor advised fund, on the day that you make that contribution of that asset, that then becomes the value that you can use to claim the donation. What then happens is that the fund would then sell the assets and convert the asset into cash. Those dollars are then placed back into your fund that you can then distribute among the charities of your choice at your discretion in your timetable. So you're not under a time crunch to actually have the funds distributed out of the donor advised fund to your charities. And as we talked about in the bunching, when we said, well, let's take 3 years worth of normal charitable contributions and bunch those into one tax year, well, you can do that with a donor advised fund and yet not distribute all of those funds in that particular year. You can spread those out across however many years that you want. Again, it's at your discretion. You are the advisor to the fund. I will say that once you transfer the assets into the fund, it's an irrevocable transfer. You cannot get that back. And what the fund or the sponsor will do is then mail the check to your designated charity as directed by you. So think about no writing checks, no postage on envelopes, no paperwork. You have a sponsor now that is doing all the record keeping for you. And at the end of the year, you have one statement that you can give your tax preparer that shows all of your contributions into the fund, which then drives the amount that you can claim on your tax return as a deduction. How is the account funded? Well, the simplest way to do so is simply to write a check and move money into the donor advised fund. But a more powerful tax savvy way to make a bigger impact is to give appreciated non-cash assets, whether those be stocks or mutual funds or real estate, where you can then convert taxable gains into charitable dollars. So in other words, if you have a stock or a mutual fund with significant gains based on performance over time, you would be wise to consider those in donating those to the donor advised fund, because now you don't have to pay the capital gains tax. Whereas you might have sold those previously and paid the capital gains tax, and then the net would go to the charity. now the full amount of the or the value of that stock or mutual fund is benefited to the charity, and you're not having to pay the capital gains tax. And another strategy, if you're really not wanting to donate a stock that you've held for a long time and it's got a huge gain, and you have some cash, well, go ahead and donate it, and then just buy that stock back or mutual fund with the cash that you have on the same day that you execute the donation. So where can you find a donor advised fund? Well, there are many, many sponsors. Vanguard, Schwab, of course, is one. The National Christian Foundation is one that I personally have used for many, many years. And we, of course, can facilitate at a Asset Planning Corporation a Schwab charitable donor advised fund, which makes it really easy for our clients to just simply call up, have Steve donate the funds to whatever charities that you obviously are near and dear to your heart, and can easily be done. Very little paperwork, and very, very seamless. So please consider a donor advised fund for those that are charitably inclined, which I know many of you are, as part of the tools in your tax strategy, but more importantly, as a way to simplify and consolidate all of your giving. And there's so much more that can be done with a donor advised fund, and we just don't have time to do that today as on this video. But we certainly are here to answer any questions that you might have, and we appreciate you being part of this. Taylor, it's all yours.
Thank you, Joe. We appreciate everyone who's followed this series. If you have questions or comments, please reach out to us. We would love to hear your thoughts and also your suggestions for other topics you would like to hear from us about. We just really appreciate everyone's contribution and time to this. And if you would like to follow us on our blog, we will have more to come, assetplanningcorp.com/blog. And thank you again. Have a wonderful day.